Welcome to the Buy Box Experts podcast. We bring to light the unique opportunities brands face in today's e-commerce world.
Hi, I'm James Thompson, one of the hosts of the Buy Box Experts podcast. I'm a partner with Buy Box Experts and the former business head of the Selling on Amazon team at Amazon, as well as the first account manager for the Fulfillment by Amazon program. Today's episode is brought to you by Buy Box Experts. Buy Box Experts takes ambitious brands and makes them unbeatable. When you hire Buy Box Experts, you receive the strategy optimization and marketing performance you need to succeed on Amazon. Buy Box Experts is the only agency to combine executive-level advisory services with expert performance management and execution of your Amazon channel strategy. Go to buyboxexperts.com to learn more. Before we get started with our guest today, I'd like to do a big shout out to the team at Disruptive Advertising. For your off-Amazon advertising, Disruptive Advertising offers the highest level of service in the digital marketing industry. Focusing on driving traffic, converting traffic, and enterprise analytics, Disruptive helps their clients increase their bottom line month to month. Check out disruptiveadvertising.com to learn more. Today, our guest is Scott Scharf, co-founder and chief e-commerce geek at Catching Clouds, an accounting firm that specializes in accounting services for e-commerce companies. Catching Clouds specializes in helping multi-channel e-commerce sellers grow their businesses by providing current, accurate, and actionable financial information. Scott's firm provides virtual controller and bookkeeper services combined with the accounting cloud tools, design, and management necessary to be its customers' complete accounting department. Today, Scott shares his expertise on how accurate accounting helps brands to make better decisions. Welcome, Scott, and thank you for joining us today on the Buy Box Experts podcast.
Thanks, James. It's good to see you.
So prior to running your own firm, you worked at a variety of different types of companies, and you've been quick to point out how companies can become inefficient and tedious to work for. Hence your jump into setting up your own firm with your wife, Patty. Tell me more about the entrepreneurial Caesar that led you to start your own firm.
Yeah. So, I started small and worked for I'm a long time, 30 plus year IT geek. So I've had multiple different chunks to my career. I had no idea I'd end up owning an accounting practice. I knew I married an accountant. Okay. So I knew that, but really a lot of it was I ended up working for a bigger company. Then the company I was working for, I was purchased by a global multinational. And so I went, and then I became a global subject matter expert. And I was always in the entrepreneurial groups or the leading or the emerging technology groups. So I was always in those. But those large companies were so inefficient. Okay. They were just, the management teams would move in and out once or twice a year and try to change everything and didn't know anything about the business. And I know you've worked for a big company too. So it was frustrating to no end for me. And I was so happy to come back to having my own company with my partner and wife and to really have a more direct impact when you're dealing with an entrepreneur, okay, which I'm an entrepreneur, and their peers, they want to get stuff done. Okay. They want to get stuff done. They're open to new ideas, and they either say yes or no for the most part to, yeah, I'll do that. No, I won't. And and you can move on and you make things happen. And so it's just so much nicer. I love our clients, really interacting with them. I really consider them peers and friends in some cases, because they've got the right attitude. They want to, they take risk. They risk capital, whether it's their kids' college fund or their investments to focus in on this crazy world that is e-commerce that both of us know. And they're just really interesting people, and they're passionate about being, experts, either being entrepreneurs and running business or running a warehouse or social media or product design or all the different aspects, all of them, or just a few of this. And it's just fun.
So as an entrepreneur, you get to be much more involved in publishing original thought. One of the topics you published on recently is how to optimize cash flow during a crisis. For many brands, COVID has created challenges around cash flow. I'd love to get your thoughts on what recommendations you have for brands dealing with shifting customer demand, potentially unused overhead, labor challenges, and all the likes caused by COVID.
Yeah, well, I mean, the biggest challenge that our clients and all the sellers I'm talking to is they're up 100, 200, 300, 400% or more
Yep.
in sales, which is great. And everybody wants to keep up with that growth since we've kind of popped the ceiling on, where e-commerce was of total retail. And now it's just accelerating like crazy. So one of the challenge for the people that don't have accurate financials is you can't take those to the bank. I've talked to so many sellers that are like, look, I have enough sales to justify, $1 million line of credit or 200,000 or 10 times more than they ever had before.
Yeah.
But they don't have a balance sheet that balances or a profit and loss statement they can take to a bank to get a large line of credit. Okay. To be able to keep up with those things. So they have cash flow to actually spend. Otherwise, it's you can run out of inventory, then you get paid for it, you sell, then you get the money for it, then you can buy new inventory, and then you're back out. And there's just versus having enough cash to keep track of all of those things. So that's the first challenge, is just not having enough capital to support the cash flow of a growing e-commerce business. The next piece, yep, go ahead.
Sorry, just a quick aside. You said something very interesting. You said going to the bank. 10 years ago, banks wouldn't lend money to e-commerce sellers. Are you starting to see banks becoming more open to companies that are primarily FBA businesses?
Banks are a pain. Okay. And you're right. They wouldn't even talk to e-commerce businesses. They'll talk to them now, and you have to have been in business for at least a couple of years. And you really have to jump through a bunch of hoops, but it really does work out if you have that right banking relationship. The bank is kind of the first best, cheapest place to get funds, okay, for general ongoing operating funds. Now, there's a ton of opportunities around SBA loans, and that would be the kind of the next level if you can go and apply for one of those as a small business, because then that can be very cheap money on good long-term terms. And then once you've got that, you've got short-term things like Brex and Clearbank and a bunch of these other shorter term pieces. But you have to watch out when you need all that capital. You're either tapping into your own funds or friends or family or other investors or giving up equity, or you're going to online loan shark. I mean, when you do the math on some of the capital loans from the marketplaces or the shopping carts or the various companies that pop up saying, hey, we'll lend you $500,000. And then you realize you have to pay $50,000 a day to pay it off, So it's just interesting.
Sorry, I cut you off when you were talking about some of these cash flow challenges around COVID.
Yeah. So the first thing, you can't know what your free cash flow is if your bookkeeping's not up to date. Okay. So you can build a cash flow only projection that shows, here's the income, here's my Amazon income every 2 weeks, here's my Shopify income every day. And, pull that, Amazon income using Payability or Payoneer or other tools. But if you don't have at least a spreadsheet that says, these are my expenses, this is where I have payroll, these are my regular monthly warehouse shipping, whatever expenses. So how much free cash flow, because the goal is to end up with a spreadsheet that looks out short-term 2, 4, 6, 8 weeks that will let you know how much available cash you have to pay for inventory, marketing, okay, investing in the business, new products, other things that you're doing. And then, if you choose to, money out for the business, for the owner. So it's breaking it down to those things and then figuring out the next step is what is the mix of those things. We've seen a lot of sellers that just have runaway advertising. And one of the great ways to preserve your cash flow is just to get really, really picky about that and invest the least amount of money in marketing that gets you the results that you want.
Right.
And make sure you have exclusive coupons so people can't double up your coupons, and make sure that you are really tracking and you don't have any settings that let you have a runaway marketing expense that just chews up all your profitability or more.
So let me ask you, in Q4, we're already seeing rather significant bottlenecks in Amazon's ability to handle FBA inbound shipments, as well as getting shipments out the door to customers on time. That may drive sellers to invest in systems that support merchant fulfilled orders. From an accounting perspective, how do you think about FBA orders versus merchant fulfilled orders? And what should sellers be prepared to do in their accounting numbers to deal with the differences between these two fulfillment options?
From an accounting perspective, there isn't that much of an impact for FBA versus FBM sales. And we have a combination of clients that are doing both. We have clients doing seller fulfilled prime, and looking at it, it's really more from an accounting perspective. The main thing is being able to at least monthly review your costs, so you understand the impacts of making these things, so you can adjust your pricing. Because if you haven't set your pricing high enough, you understand your landed cost, the buy cost, plus all the costs to ship it, whether it's FBM or FBA, you could be selling your product at a loss and not realize it. Then it's just a matter, I talk about, businesses being resilient, both in their accounting and as a business, their supply chain, and then their fulfillment. So in their fulfillment, you want to mix that up between FBM, whether it's your own warehouse or a 3PL. And then you want to make sure you have metrics to allow you to measure the success and the cost of those things, even if it's a reality that you have to. If you can't, get your products into Amazon or get them out of Amazon, you need to do something else. And so many sellers are doing that. They all learned that this spring when, all of a sudden, 99% of some businesses' inventory was all locked up for months.
Right. So it seems like common sense to say the firm should know how much money they're making. But in my time working with Amazon sellers, I am just amazed how many don't have accurate or timely numbers to track their financial performance. Without scaring sellers, how do you encourage prospective clients to make the investment in proper accounting? And what does such accounting do to help improve their ability to make even more money?
Cool. Yeah, that's a great question. So, most sellers did not go into business, to do accounting or pay sales taxes or manage people or whatever else. They have a bigger why. And we've looked at, God, now, and you too, we've probably looked at 2,000 sellers' books over the last 9 years. So we've had a good smatter, and we're only working with a small percentage of those. So the biggest thing that we care about is being able to allow to make those great decisions. So there are great real-time tools that will tell you profitability per SKU, profitability per order, the velocity of sales of your different products, and all those different things that are great real-time tools. And they can provide really good information, but there's a big difference between that and double entry accounting, where all the accounting's done right. Every transaction's there, it's coded properly, and then the books are reconciled, where that means you can have data flowing into your accounting all day long, but if you don't compare it to a bank statement or a merchant provider statement like Shopify Payments or PayPal or whatever, you could think you have $1 million and the bank thinks you have 50,000, and the bank wins unless you catch it and can prove it. But the real value is the ability to make great decisions, the ability on a either daily, weekly, or monthly basis to be able to look at your financials and understand when you make a decision on a lightning sale or something else, what was the impact to your financials, so you can decide that was a good thing. And after everything has shaken out, that was a good decision or not. And you can adjust, accordingly. And another nice thing in this world is that accounting, if done right, every bank account, every transaction, you have somebody that makes sure that the balance sheet balances. It's the truth. It's actual truth that you can use to make decisions. You can take it to the bank. You can take it to investors. You can use it to sell your business if you're burnt out. So the real value is that gut check. So we meet with all our clients monthly. And to me, it's the most critical thing. Yes, we do all the background work and everything else in the background. But when we talk to our clients and they go, wait, I thought I made $200,000 on Shopify. And then we go, no, you made, 150 because the Shopify dashboard showing you voided orders that you never got paid for. And the whole point is to just adjust that gut feeling. And, when we first start off with sellers, it's off by like 20 or 30%. What they think and what their real-time numbers are and the accounting number. Then we can refine their costs and other strategies to get to the point where it's 5% higher, 5% lower. So they know when they look at the real-time tools, they go, oh, I add 5%, I'm doing 5% better. Or I'm always doing 5 or 10% worse. And then you can do that. And then you just adjust your gut. And that's how we have a client that I just saw a report from last year. We identified a number of issues, and their internal profitability is up 1,000% Now, some of that was us providing financials and pointing out the issues on shipping costs and other stuff and how much they were spending on marketing spend. And then they just made the hard decisions and stuck to them. They cut back on marketing spend. They optimized their seller fulfilled prime and did other stuff that really optimized it, but they wouldn't have known where to focus without accurate financials. So there's just a ton of value. You can sleep better at night. If your spouse is involved, you can tell them when they ask you, are you making any money? I mean, you're always working, but
yes,
are you making any money? Being able to answer those questions are pretty critical. And, if you were how stressed would be if you're magically teleported onto Shark Tank, okay? Because you don't know those numbers. You really couldn't answer those questions. And that's really the key value of, having accurate financials. It makes you a better long-term business.
So one of the shifts that I've seen recently is that, a number of our clients are what I describe as, national brands or brands that started in physical retail and now they're coming online. They've already got an accounting department. Mm-hmm. The accounting department says, oh, great, you added Amazon. And yet what I'm seeing over and over again is the typical accounting organization is having to learn a bunch of new stuff to be able to tackle the eccentricities of what happens with e-commerce accounting. Mm-hmm. So talk to me about the kinds of changes in perspective that an organization needs to take on in order to incorporate some of the uniqueness of what happens in e-commerce.
Yeah. So, first they have to understand the fundamentals and all the terminology, kind of the value for us, for anybody talking with you or me. We already know short-term, long-term storage fees, removals, disposals, FBA reimbursements, which is still a magical, mystical thing that happens. We can break down the numbers. So for those accounting departments, you have to take the time to learn, what's going on and actually ask questions. The next piece is what's critical and what we focus on is you have to understand the data. Okay, where is the data? What data is available? What data can I download? What data can I use with apps? Mm-hmm. But if you're not willing to grapple the data, you'll never get a handle on it to understand whether you use the Amazon transaction report or the sales tax report or just the settlement report or which of the inventory reports can you trust at what times of the month? If you haven't figured out those key things, and then some of the accounting we talk about, what we do is accounting. We do GAAP light, generally accepted accounting principles. Mm-hmm. And so the ideas, but the biggest thing is too, if they're a larger company, they might have an ERP like NetSuite and might pull in every transaction. Okay. Not only into their operations and cloud inventory tracking, but also into the accounting. And they really have to understand, I've talked to dozens and dozens of sellers on NetSuite that can never reconcile what's going on in Amazon because not all of the financial data flows through orders. It flows through orders and the settlement statement. And they have to understand how those things come together and how to reconcile and adjust for those. We've been using the same tool, A2X Accounting, for 6 years now to post Amazon. And now working with them, we have Shopify, Walmart, and eBay, in which it takes all that data, aggregates it in an accounting way and posts it following accrual methods. So it splits the income, and then you can align your cost of goods sold. But really it's income posting, cost of goods sold, and sales tax are the three critical things that you have to understand as an accounting department, that if you can post your income, preferably in a summary fashion is what we recommend, especially for smaller sellers, then being able to understand the costs and what cost of goods sold and the timing of orders. And then being able to track that same order data to make sure that you're collecting sales tax properly and filing it properly. Those are the key components.
So you talked about some of these accounting essentials that you need to be aware of if you're doing e-commerce. Mm-hmm. One of the issues that I run into with our clients is this whole concept of how do you do skew rationalization? How do you do P&Ls at the SKU level so that you can make sense of the fact that, oops, a bunch of the stuff I sell, I don't make any money on Amazon because of various types of fees. How do you, if you're a brand that's never done SKU level analysis, what does that transition look like when you go from, hey, I finally have an accountant who does my full books, down to, hey, I have an accountant who does my full books and tells me how to look at individual SKUs from a profitability perspective?
Yeah. So, typically that's a virtual CFO level versus the day-to-day bookkeeping, accounting, and controller level work. So that is typically a more advanced piece. Since we work with Xero and many sellers are on Xero or QuickBooks Online, which can't support every transaction, you've already got summary data. You can't do that analysis, that skew analysis inside your financials. You can with NetSuite or a higher end ERP, but it takes a lot of work to get there.
Yep.
So we first look at a combination of dashboards and tools, things like Inventory Dash Planner and others that'll do that, automatically aggregate that together and get you better real time. So all you have to do is upload your costs and it gives you analytics on the velocity of sales, the profitability per SKU, because you can have SKUs. People don't realize that you can have a SKU that has a lower profitability. It's not your higher profit SKU, but it sells 10 times more than anything else. And it's making you 80% of your money.
Yep.
And once you know that, you can focus in on that and know where to cut it back. So it's a combination of either leveraging the tools and really getting familiar with the data, hiring virtual assistants to pull it together so that the owners aren't doing that, or hiring a virtual CFO, which we can provide, or a ton of others that will do that analysis. But I always want to flip that CFO view on its head, where they're not spending 80 or 90% of their time being spreadsheet monkeys or analyzing data. We flip it over where they're spending 20% of their time analyzing the data, finding the insights, and then the next 80% providing feedback and advisory services and consulting to the entrepreneurs or their operations teams to make that move forward.
Thank you, Scott. So I want to shift gears here a little bit. I want to talk about some of the shifting consumer preferences that have happened since we went into lockdown. Consumers are changing the way they allocate various parts of their wallet and moving disproportionate dollars to online. Talk to me about some of the short-term changes that you've seen with your firm's clients around things they've had to do to deal with some of these changing consumer preferences. You talked earlier about rapid growth of sales for some of them, but what does that mean, the implications to the business that you end up having to help coach them on?
Yeah, I mean, well, it's first looking at cash flow so they understand how much cash they have to invest in either new supply chains, new partners, new products, or just looking at resiliency on your supply chain. I mean, most people realize that they need not only a China supplier, but Vietnam, India, US, whatever. So you've got that piece to make sure that it's there. And then the next things is you've got to stop, and the owner, no matter what, has to pull themselves out and work on the business, not in the business. So they might have roles in the business, but if you don't have somebody stepping outside and looking at what's going on and questioning things and challenging things, that's to me one of the biggest challenges. They get consumed with fulfillment for 3 weeks and then pop up, and then they didn't do any purchasing, and then they run out of product. So a lot of it is just focus. And keep in mind, I've got entrepreneurial ADD, just like most of our clients. Like, I've got an attention span this long, which is why I married an accountant who takes care of other stuff. But you want to make sure that you're looking at those things and that you're checking your cash flow. Really, if you're doing rapid growth, you should be looking at it weekly. Okay, sometimes daily, but really you need to be looking at it weekly to understand, do I have enough cash to keep things going for the next week, 2 weeks, 4 weeks? It really becomes one of the critical things that they need to look at, because otherwise you run out of capital, you can't buy more inventory, or things moved around. The other impacts have been, if they didn't think about their businesses and growth. We've had our clients hire more people this year than we've seen. Most of our clients run pretty lean.
Yeah.
Most of them have increased their virtual assistants and have increased their staff in the US, whether they have a warehouse or not. If they have a warehouse, all of them had to go into multi-shifts. I mean, they had to have split shifts and gap them up and group this group of 10 together on this side of the warehouse. And they had to have another group that worked together and could be closer to each other. Like, new things people didn't even, consider, that you not only have to understand your products and your business from a perspective of Chinese competitors or competition or, seasonality, but now you have to understand how you run your business and how your products work in a pandemic and a lockdown situation.
What are some of the unresolved issues that you're still working to solve for your clients? What makes those issues harder to solve than other types of issues?
Yeah, I mean, some of the same ones that I've been trying to solve for a while, but it's so much data. One is FBA reimbursements. So we can post them positive or negative and track FBA reimbursements. from an income perspective. But the part that we don't have is Amazon doesn't always and very rarely provides a SKU that relates to that FBA reimbursement. So you can't move the cost of goods sold appropriately. And it can be tens of thousands of dollars for some sellers, which means it can be tens of thousands of dollars of inventory, which throws off your inventory numbers. That's one of the key ones that I'm focusing on. I'd like better, more automated solution around removals and disposals. So it's one of those reports that if you run it every 5 minutes or every other day, it changes, okay? Like if you're kicking off removals or disposals. And so we just run it on the 10th of the month to look at the prior month, just so it's consistent because it's there. And I would like more data around there. What are some of the other things that we're working on? It's finding more KPIs, contribution margin, and other things that we're already providing, and really looking at those things that provide meaningful information. So I'm always digging for more of those. Where can I look at the data and provide more insights, either automatically or see where those pop out in the financials, so that we can say, oh, when this happens, we need to go look at vendor deposits or inventory deposits or inbound inventory or inventory disappearing into unsellable at Amazon that sellers aren't paying attention to. It's a combination of kind of those same things.
Are there unexpected opportunities that COVID has created for your business or for your clients' businesses?
For us, it went from me talking to a fair number of sellers that are like, yeah, accounting and bookkeeping, yeah, I do it once a weekend and it's not that important. But it turned out that having detailed, accurate financials when things are good and normal is pretty important. But when it's crazy, it's critical. Okay. So I am talking to more sellers than I ever have who are like, yeah, now this is important, and so like, because they can't go to the bank to get more money, or they want to sell, but no one will talk to them because all they can say is, look at these sales. But we're like, we don't know how profitable you are. So why would we buy your business? They might buy the brand and care about the brand and the product, and you can sell it for that, or your social media following if it's big enough. But one of the critical components is not only a focused brand, not only a solid social media and marketing strategy, but accurate financials. And so people are starting to realize that it is a critical tool of many. They've got real-time tools, but it's really such a great double check that they're starting to realize, look, this is the value. And if I want to keep doing this e-commerce thing, not only now while it's crazy and growing, but for the long term, I need to have accurate financials and be a real business. Can't be a hobby.
So you talked about people potentially wanting to sell their businesses. In the last 8 months, a huge increase among investors to buy FBA businesses. Private label brands on Amazon are becoming a hot commodity. What guidance would you provide to these firms as they think about the journey to getting ready to sell their business to an investor?
Yeah. So start now. Even if you're not planning on selling for 2 or 3 years, okay, work on your financials. Make sure your business is as structured and efficient. So all the great decisions to make you profit out of the business are the same. So those same decisions are there. And then talk to a broker now. Talk to them once a year, every 6 months, so that you understand what those buyers are looking at, and that you can make some adjustments, not major ones, but minor ones to what you're doing, so that you understand. I'm a big believer in having a hit by a bus and doing anything possible to deal with Murphy, having insurance and the other pieces. But that same hit by a bus, if something happened to me, I got sick, which, lots of people getting sick this year. What would I do? How do I preserve all this time and effort and equity and capital that I've thrown into this business? How do I make sure that something positive happens with that? If something happens to you, that you could sell the business, and that you've already got a plan and at least a business card for your founder, your partners, or your spouse or whoever to go sell your viable business versus it just imploding when you're not there. So it's more planning those things and taking that step back of really evaluating where you are, work on your hit by a bus, but go talk to a broker and understand it. But make financials a priority.
How long does it take to get your numbers in order and start doing some of these little course corrections? You talked about 18, 24 months. Realistically, is that going to apply to most companies that have been taking accounting as a... I'm sorry, Scott.
Oh, sorry. Me too. Sorry. So that's kind of how long your timeline for selling. So In general, if we're experts, we onboard multiple clients every month. We pull accounting data and clean it all up. From the time I talk to somebody, it's about 90 days. So our onboarding is about a month, but there's decision and back and forth and whatever else. So our onboarding takes us about 4 weeks to clean up a year or multiple years of accounting. And we rerun it all from scratch. Almost nobody's systems are clean enough for us to use their existing zero file, and we don't use QBO. We convert people off QBO. So you're looking at, it's probably, if you're outsourcing it, probably a 90-day project. If you decide to do it internally, it's probably a 6-month project until you have all the processes and learn the basics to the point where you're like, oh, this is really working. In an outsource model, and we provide outsourced services, there's kind of a peak right at the beginning for the first week or two for the owners, and then they get a ton of time back. And then after whatever time frame, now make it clear, they're 100% responsible for the success of an outsourcing relationship or converting your accounting or working with buy box experts or whoever else, that they have to stay plugged in as the owner, project lead, overseeing what's going on, but they sure don't have to do all the work. They don't have to become an accounting expert. They don't have to learn Xero or QBO. There are people that you can hire, whether it's companies like ours or virtual assistants, or hire local staff if you want somebody that you can, see in person, which doesn't happen, which is less a key thing today. Those are really the key things to work on.
It's fun listening to you talk about this stuff, Scott, because it rolls right off your tongue. I mean, you've seen these stories play out over and over and over again. Tell me a little bit about what was there a turning point for you when you realized, I'm good at working with brands and helping them think through not just the accounting portion, but what to make of the numbers and how to help them think about growth by leveraging the data. Was there a moment where you said, yeah, I have a business, but I think this is fun. I think I'm going to keep doing this.
Yeah. So, I mean, you can't be as lucky as I am in marrying an accountant. So I knew some about accounting. I had looked at financials. I had been responsible for, the EBITDA for different things that I had done and whatever else over time. But there's a really big difference in the fact that we run our business. So, Patty's our CEO and CFO and presents me the financials, not only for our business, but also personally in Xero, and the same thing. Yeah. Our first client in January of 2012 was an Amazon seller. Okay. And so we looked and I went, wow, this is really complex. There's a lot of data. It's dynamically changing. Now, I still think, and I don't know what your number is, but I think it's at least 10 or 20 times harder to sell on Amazon than it was way back then. For the people that caught on and realized they could do it, they really did really well for a number of years there.
Sure.
And people can still do well on it now. And so we looked at it, and at the beginning, we took on a few clients, the local chamber of commerce and other stuff, but we always knew we'd pick a niche. And when we decided to be 100%, about a year and a half in, 100% e-commerce, it just freed us up to focus. Like, look, this is what we do. These are the sellers we talk to. I don't have to talk to a restaurant or a nonprofit or anybody else.
Yep.
It was that focus. And then the big learning piece for me is you just do the same thing, no matter whether it's boring or not. You have the same conversation. You did your presentation at the beginning of this, and you say that all the time. And that's the exact same thing you've probably said for years. Right. And that's where the real value is. And then it turns out that you can start to get those benefits where it's easier on you, it's easier to remember, you can be more focused on your marketing, your communication, and the value you provide. And then you have less to deal with as an entrepreneur, and you can, take a break and read a book and know that you don't have 5 million things to do, just 2 million, because you're an entrepreneur. So, I mean, that it was really that focusing on the niche, and there's riches in the niches. Same thing for e-commerce sellers, trying to do the scatter shotgun approach on 20 different categories of products and whatever else is distracting. The more you narrow things down, even though it's scary for most people, the better off you'll be.
Let me wrap up our conversation by asking you a very open-ended question. What advice, gathered from all of your experience working with all the types of e-commerce brands you've worked with, what advice would you give to an online brand that's looking to build a successful Amazon business?
I try not to repeat what I've already said.
You've talked extensively about know your cash flow. I get that.
So, I mean, so you got to focus on working on your business and yourself as an entrepreneur. So I'm a huge Simon Sinek fan. I've got Infinite Game and, Leaders Eat Last and a bunch of other stuff that you have to make the time to focus on becoming a better leader, a better entrepreneur, and better understanding your business. Patty and I have been doing, there's a great book called Traction that's part of EOS, Entrepreneurial Operating System. So what I would say is most sellers haven't run a business, or they worked in finance for a big company, but a bunch of other people did all the finance and accounting and bookkeeping, or they haven't built and sold 3 or 4 businesses and gone through it. Some e-commerce sellers are, and they've done this over and over, and they've done the startup thing, but most haven't. And things like the Entrepreneurial Operating System provides a structure to provide focus for somebody with the ideas and popping all over to really be able to focus on the business. And so we're actually tuning up how we're using EOS internally to make us both more efficient. And so that's really, it's making sure you don't get, like I said before, sucked into doing the work in the business. You have to make it, because that's the only way to make sure that the business is going where you want it to, and you don't open your eyes 6 months later and go, what happened? We were selling whatever, and now we're selling a completely different product. How'd that happen over the last 6 months? And it could be you pivoted because of COVID. You had products that didn't sell in a lockdown, and now you do. But if you're not paying attention, and that's probably the biggest thing, it's just really hard to take a step back and get perspective.
Let me push back just a little bit here. Having been a small business owner selling products on Amazon, one of the things that benefited me the most was to actually get my hands dirty and understand all the day-to-day stuff. And once you're in the dirt and you're dealing with all this stuff, how do you extract yourself so that you can work on the business? Because the reality is, even if I hire somebody to do this and that on terms of the day-to-day stuff, I need to continue to have some pulse of what's happening day to day to be able to then extrapolate and look at the big picture.
That's a great point. So I do think every seller, no matter what you like or dislike, should wear every hat in the business: packaging, shipping, accounting, bookkeeping. Like, you need to wear every hat long enough, even if you hate it or you don't have the skills for it, to have an understanding of what's going on. And when I say pulling that out, you might only need, if you're really efficient, 5% of your time to work on the business, and you can spend the rest working in the business. Because what happens is most sellers and most entrepreneurs end up hiring people to do the stuff they don't like accounting and sales tax and maybe operations or shipping or whatever else. And then if they don't like marketing, they hire a marketing company or a marketing person, and then they gravitate. The problem is, it's when they spend 100% of their time doing that thing, whether it's product design or purchasing or, running their Amazon store or whatever else. But in general, I would say you probably need to if you're not spending any time, you need to figure out how to get a third of your time available to work on the business. Okay. And then you can spend the rest of your time doing all those things where you have to jump in and help, and you have a huge order and everybody, all hands on deck. That's great. And then as you get more efficient with your time, you can get that down to a quarter or 20%, or somewhere between 5 and 10% of the time has to be worked on the business. Or if you're really efficient about hiring those outsourcers and you have ways to monitor what they're doing, whether it's an internal staff person or an external efficiently, then you get more and more time, and you can spend less time working in the business. And then you can just pick and choose and go, this week I'm going to do marketing, and next month I'm going to do product design, or I'm going to go to China and design a product. But if you don't block out and lock out that time to go for a walk and think and everything else, you can't do it. But it's really hard to make that shift to go, wait, I don't have a third of my time. That would be even less sleep. Start with 5% and then add another 5 and then another 5, and go, look, every morning from 6 to 7 after my workout, I only work on the business and plans. And then you throw yourself into the rest of the business, but you have to make those calls.
Scott, I want to thank you for joining us today on our podcast. For those listeners interested in learning more about Scott's organization, please visit catchingclouds.net. Thank you, and we'll see you again on the next podcast. And now, to finish today's podcast, I'd like to share some final thoughts. For third-party sellers to be successful on Amazon, a critical lever will be soliciting feedback from customers. We at BuyBox Experts are really big fans of the team at Ecom Engine and its tools that help Amazon sellers to simplify the process of messaging customers of Amazon orders. To learn more, go to ecomengine.com. And with that, I want to thank you for listening today, and I look forward to joining you next time on the BuyBox Experts podcast.
Thanks for listening to the BuyBox Experts podcast. Be sure to click subscribe, check us out on the web, and we'll see you next time.